Right, good morning everyone. Let's rock and roll. Okay, last night's session, again, a bit of a non-event in U.S. markets. I think we had S&P that made another closing high, if I'm not mistaken, or right around that level. We had the Dow also kind of closing more or less a hair above flat line, and then the Nasdaq correcting about a third of a percent. So we've really just gone into a period of ultra low volatility out of nowhere, which is like we've talked about before, quite amazing. We've had some economic data yesterday, industrial production falling a touch, a little bit lower than expected, but nothing nothing data-wise to really give the market anything specific to do. Baker Hughes and Halliburton announced a deal. Halliburton's going to acquire Baker Hughes. Halliburton got punished badly on the deal, down about 9% on the day, if I'm not mistaken. Baker Hughes obviously rallied nicely. And then we've got Allergen, which is being bought by activists. Old Bill Ackman, catching a nice little pop in his portfolio there. But there's very little going on in markets at the moment, and so we've kind of just fallen back asleep, fallen back into a lull again after having an enormous V move in equity markets. Pretty much all the markets have just gone to sleep. That includes our market. We've also moved into ultra low volatility environments after being in a ultra high volatility environment, which is really strange, and it's kind of eerie. To me, it seems a little bit like the calm before the storm, because I find it very hard to believe that after all of that volatility that we're just going to die down and grind sideways for a really long period of for too much longer. So I think the move that we're going to see out of this is going to be pretty significant. If you look at the Asian session overnight, once again, Shanghai and Hang Seng down 2 days in a row after they joined their markets, the interlinked the markets, so it didn't really do a whole hell of a lot for them. Shanghai was down probably more because of their home price numbers, which came in. I think it's the first year-over-year loss that they've had in 2 years, and the sixth consecutive month of monthly price depreciation in home sales. So, obviously continuing to weigh on things. You saw mining stocks were a bit heavy again in Sydney. That didn't really follow through after some of the rally that we saw yesterday in Europe. We had Fortescue that was down over 6%. Iron ore continues to fall to record lows, like we talked about yesterday. Many of the forwards now starting to drop below $70, and all the way out to about 2017, the prices all the way, all the forward contracts all the way down to as low as $70. So there's no that right now markets aren't showing any bright light for iron ore stocks, so you're probably going to continue to see them, fail on bounces. Right, look at the charts of interest today. A nice little chart out of Business Insider. Basically, what it's showing you is Business Insider via J.P. Morgan. It's showing you the long-term performance and how holding things for a longer period of time gives you more normalized returns and shows you that you can expect those more normalized returns over a longer period of time. Also showing that it becomes very hard to time the market in really short periods. So, in essence, the guys that are still playing for the long term end up usually probably outperforming. All right, corporate action this morning. We have PPC out with numbers, headline earnings per share. Definitely soft, revenue soft, Divvy a touch light as well. So I think could be under reasonable pressure this morning. Reuters as well going to come out today after the bell. And then we've got Home Depot today before the market opens in the States. In terms of market data, we've got UK CPI numbers 11:30 as well as PPI numbers. We've got the ZEW survey in Germany at 12. That one's going to be interesting. Again, people are watching Germany very closely at the moment, so keep an eye out for that. That could be market moving at a quiet period of the day. And then the U.S., you've got PPI numbers coming out as well at 3:30. Okay, let's get into the maps. All right. First thing we're going to have a look at here is the euro dollar. Zooming it a little bit forward here, you can see that we once again, after making this little consolidation here, made a little continuation pattern, took out the highs in the dollar or the lows in the euro, and now we've kind of made a little bit of a bear flag for the euro here, and dropping out of that ever so slightly as of this morning. You've also got the yen, making new lows again this morning, and this trend just continues. And I just, we talked about this yesterday. We just continue to seem to be able to stay in this very long-term secular environment with dollar strength, commodity weakness. The same theme just continues to hammer through markets. In our market every day, you kind of tend to see the exact same stocks that are rallying, exact same stocks that are struggling. It kind of looks like that globally. So I think until we get some sort of shake-up, and we'll probably see it in the currency markets, we'll probably see it in the bond markets, then we're going to probably see more of the same. All right. Let's look at Standard Bank here. There's not a whole lot of charts that are really giving us a lot of opportunity at the moment. Like I said, we've been moving out to the right quite significantly and quite slowly, so there's not been a whole lot of new trades to make of late. But Standard Bank definitely making a little bit of an inverse head and shoulders setup here. We're getting very close to the neckline, or we've tested the neckline over the past couple sessions, and we keep failing it. But I think if we get above now 138, we can get a close above 138, then I think we're up through the neckline there. And I wouldn't be surprised to see this thing test the all-time highs. That's where our target would be. It would be up somewhere near that. Anglos and Billies, they also both have kind of a little bit of an inverse head and shoulder potential setup, in the making. Sorry, it's not there, and I find hard pressed to believe that this thing's going to be back up at 265 anytime soon. But definitely a little bit of a head and shoulder in the making, potentially. Billetins, you can see the shapes there. Doesn't mean it's going to play out. It's too early to call, but I'm just mentioning it because I don't have a whole lot else to show you this morning because, like I said, we've been drifting to the right and things have been not very volatile at all. So the next thing that we can have a look at here is CFR, which yesterday kind of dropped. I'll show you on the 30-minute here. We talked about this chart the other day, and we talked about how we've been in this little this little descending triangle off of the big rip that we had after earnings, and 96 just continued to be a bottom. Maybe 3 or 4 days so we touched 96 and we couldn't get below it. Yesterday it really underperformed the market, traded at about 95 and a half, or to close at 95 and a half, but traded down around there pretty much the whole day. And the way that it's looking at the moment, wouldn't be surprised to see this thing continue to sell down from here. So just watch for that one. It could continue to be disappointing. And then the last one I'm going to show is Discovery, and I'm actually going to come out to a full year chart here. The reason why I wanted to show this thing's obviously it made a breakout a few sessions back. We did have a sharp pullback 3 days ago, but we managed to bounce back nicely the next day. Yesterday we also traded well. So what we've done here in this little continuation pattern is we've broken out, we've came back, we've consolidated right on or around the support level, and now we look like we're starting to push higher again. This is a really healthy bullish setup here. So I know this thing's run hard. It's out. It's outperformed the market. It's overbought. It's whatever you want to say about it. But bottom line is the setup's very bullish and definitely looks like a higher upside target here in Discovery, especially after this consolidation that's starting to prove itself. And that's it for today, guys. Thanks a lot.